You said that Snap said revenue for the 3 months ending in September were up 6% from last year. That takes it to 1.1 billion and change, but it did mark the slowest rate of growth since the company went public back in 2017. I remember that. I was down here on the floor covering that story. What is this doing, Snap specifically doing, to other tech stocks, in particular Twitter?
Yeah, this is a fascinating one for me, JD, simply because Snap isn't really a particularly solid. Well, I guess what I should say is it shouldn't have the influence over markets that it does. Over the past year or so, its earnings reports have been a bit of a beacon with respect to ad market spending and the strength of social media companies. There are many people who question whether that's the correct way to do it, simply because Snap just doesn't have the balance sheet strength or indeed the sort of historical precedent of a company that should exert that influence. It's only been around since 2017, and the stock has really only gone in a singular direction since then, for the most part. But for whatever reason, people do pay a significant amount of attention to what the company says about ad spending going forward. Maybe because it tends to be first. It's usually the first out of the gate in third quarter earnings. So perhaps in much the same way as the Iowa caucuses give us an indication of where we're heading in presidential campaigns, Snap does the same.
Now, the company also declined to give revenue or earnings guidance. You were alluding to that there a moment ago. For the fourth quarter, is that something we might start to see from other tech companies? And overall, is there a general shift in reporting? I wonder, for a lot of the big names. We talked about Netflix's sort of sleight of hand for future quarters. I wonder if this is a trend.
I would be surprised, simply because of the way that the market punishes companies that do so, particularly here in the case of Snap. They essentially said they're probably going to have flat revenue growth for the fourth quarter. So I suppose to some degree that's a guidance of some sort. But for the most part, companies that do change that metric or indeed just abandon guidance altogether, that's not received favorable, and rightly so. Because one of the best mechanics that investors have in tracking companies is understand where the company thinks it's headed and then benchmarking its progress against that and against the expectations that the analyst puts together himself or herself. Once one of those components disappears, it becomes so much more difficult to judge not only absolute but also relative performance. So it would surprise me if companies did that, but certainly in exceptional cases, you can understand why.